Hey, YouTube. How's it going? I hope your trading's going well and you're making a ton of money. And having fun and learning. That's important. That's what it's about too. So yeah, just gonna do a quick video here. Quick analysis and forecast on ticker symbol TMO, Thermo Fisher Scientific Inc. So this is an interesting security. It's currently in a descending triangle pattern, consolidation pattern, and that's my favorite to trade because one, it's a triangle, and two, it's descending, and so if it breaks out this, on the way that you want it to, see, it can be descending upside or descending downside, but essentially you want it to break out in the direction opposite of the descension because the triangle converges tight and then the descension makes it lower. So if it's a real breakout, the wave, the breakout, the price action range is going to be maximal, like it's the most you can get. Whereas on the opposite, let's say you have a wide range, like a broadening pattern, and price goes up and then down and then up and then down and it's getting wider. Well, that eats into the breakout. So if it breaks out either direction, the broadening pattern, it's been getting wider. It ate into the breakout, so the breakout's not going to be as large, and so obviously there's not going to be. I mean, you can still make money, but it's not maximal gains, rewards, which is optimal. My personal style is less trades, more gains. Like I want to take higher probability trades less frequently, and so this is better suited for that because the breakouts are bigger, and much more manageable and predictable. So that's that. So here's TMO. Um, as you can see, it's been kind of on an uproar, like shoot, for years. So the underlying business is probably pretty good. Like I'm not familiar with this company or anything about it fundamentally. I have no relationship to them. Um, but if the equity is going up, that means the underlying business's equity is going up, which means every period, every month, and then every quarter, revenue is more than expenses, regardless of what part of the S curve this company's in. Whether it's relatively new or this looks like this issuance has been around for a long time, going all the way back to 1980. So this company's been operating for so long. They're probably at the end of their growth and into the mature phase, but not sure. I don't see. Maybe it's because we're on the 2 monthly. I don't see any. Let me go to monthly. Maybe I don't see any dividend payouts. Typically, mature companies do not need to reinvest for growth, so they pay out dividends. And any other idle cash goes into marketable securities like CDs, something very secure, bonds, or something to collect interest so as to not lose value. Okay, here we go. So they're paying dividends. What's this? 26 cents. Looks like monthly. Nope, quarterly. So, I mean, that's typically how it is, quarterly dividend. 30 cents. So yeah, definitely in the maturity phase of its S curve. So it just kind of keeps operating, tries to maintain its market share, right? Just to continue, right? They're not trying to, it's not like a startup or a growth phase where they're trying to obtain customers as much as possible and grow the business. It's towards the end of the business cycle. So, like, they're just trying to retain, they've got things all set up, they've got their growth, and they've got their market share, and they just try to maintain it and keep the cash flow going and just steady stream of dividends. And you can see that they know what they're doing because people are investing and it's been a solid up curve. And so now we're at the point where you're in a consolidation pattern after the top, after a slight throwback. It's not a correction because if you look at the waves, you got a bullish run here, a little throwback, another wave. This would need to come below here, this pivot point here. It would need to come below that to be a correction because now it's no longer in a bull trend. Like this is consolidating, so you don't know what it's going to do yet, but just like here, it's more likely to have a continuation upside at this time than not because it's not even close to here, which would totally be a counter trend, right? It topped out and now it's gone into a counter trend and it's going to go downside back to value somewhere, probably down in this area below here. Because it really ran. Like right here, this is the meat of it. This is the bulk of it right here. These are basically like parabolic upsides. Just, perfect 45 degree. No, it's probably more than a 45 degree. 45 degree in economics basically signifies perfectly balanced supply and demand. So the demand here was larger than 45 degrees. And so the supply ran out, and now they're basically giving back supply here, and it's a consolidation pattern, which means supply's been given back, and now they're exchanging. Buyers and sellers are exchanging for the next move. They either know, right? Like you have people like financial institutions, investment banks, mutual funds, insurance companies, who have their ear on the pulse and they know, okay, economy's doing this, companies are doing this. We also speak to people. We read their 10K within this company. We have we have our ear on the pulse of what's going to happen here, and we know it's not going to go up higher. So they're going to start exchanging here with people who they're going to start selling with people who bought maybe down here and want to get out for a gain, and so they exchange, and now the new owners are short, and then that's when you start seeing the decline back to value or whatever the case may be, which is generally based on fundamentals. But if you don't want to do all that work, then you can do technicals. So now here, why do I think this is a top? Well, one, we'll go down onto a lower time frame to see this pattern better, which you can do because these are all no matter what time frame, it's all the same trades. So when you go on and you see more bars with smaller blocks of trade, you can see the pattern better. Same pattern though. They're fractal. They're what's called fractal. So we'll go look at that for like a better detailed picture for forecasting. But like as you can see, it topped out here. It kind of like it kind of teased here. Like it topped out. Like it tried to go up here. No. Then it tried again. Failed. Momentum decrease. After 2 bars, you should have got out here. Hopefully you bought in down here. But after 4 bars, It was in a consolidation pattern which looks pretty bullish. They're green bars, and then it continues. So anyway, here we are, and you can see like the CCI here. Look at how high it is here, and price actions here. Then it went way up here. Momentum slowed here, but then carried it up all the way here. So what's the CCI doing? Well, look at that. It's lower. So now the CCI is on a downtrend. So what does that mean? Cash is flowing out. That's a negative confirmation. When the CCI has a downward movement, a downtrend pattern, right? High, then a bounce, then a lower high, and now it's coming down more again for the next wave. But price is continuing upside. That's a negative confirmation because they don't tell the same story. So now since this peak is lower than this peak, but price is higher than this over here, that's typically when you know it's topped. Very common way to identify a top. You've got decreasing momentum. You've got a consolidation pattern. So it's consolidating. It's not trending. It's consolidating. So it's not a trend. Like here you see this is a trend, one red bar throwback, and then a continuation. Whereas here, it threw back. It's not necessarily a correction. It didn't go low enough, but now it's consolidating. So what that says is that it's going to be a new wave, a new set of waves. Okay, it's going and taking a pause here from this trend. So ask yourself why. Well, let's look. You got a negative confirmation here, decreasing momentum, decreasing directional bias, but plenty of volatility. So volatility is still in the market on the macro, which means it could easily make a big move in either direction. So let's try to see what that means. So here's the weekly, here's the top. Right here, see, CCI came back into the blue. Right now, if this big red bar, if you got in after, right, you want to get somewhere here where the CCI is dipping in. This is such a long bar, you would be able to easily see it. It's going red. And then you're just looking here at all this kind of stuff for confirmation, decreasing momentum. Not a very big green bar, so there's not really a breakout. Volatility's peaked. So as you can see, volatility peaked kind of right at the top. And that's when momentum just gives out. And then you start going the other way. But let's go on the daily and see if we can get a little better. Interesting. Yeah, so we can draw this. So we'll draw this descending triangle here. So here's the bottom, here's the flat. And then here's this descension. So on these, you want to use the tops, but like you also want to do, this is kind of a form of regression analysis. Like the goal with these is to kind of get it to touch the most bars as possible, because it's not going to fit perfectly, but you want to get the most touches possible, because that's how regression analysis works. It's like, okay, whatever touches the most is the most accurate, right? It's like mean, median, mode. So you're picking out, I believe it's the mode, the most, like the bars that touch this trend line the most. That's what you want. You want to get the most bars And so that gives you the most accurate trend line. So there you go. And it doesn't have to be perfect, because we're not actually doing any statistical analysis or anything like that. We're just trying to, you want it kind of, you want it good. It doesn't have to be perfect, but you want it good. Just because you need to know where this apex is, and the base you want at, the base is relatively easy. It's just where the move starts. But you need to know where this apex or cradle is for two reasons. One, on a descending triangle pattern like this, you can see that it's straight flat on the bottom, and then this top trend line is descending, and it's in a triangle base, triangle pattern base to apex. And now, why do you want to know that? Because typically on this pattern, and all patterns vary slightly, but on this particular pattern, or triangle patterns in general, whether it's descending, ascending, or symmetrical, which is just, there's not a flat trend, it's just descending and an ascending. Essentially, price is going to break out more times than not around 2/3 of the way from the base to the cradle. So we're like right there. So from like here on in, it's going to get tighter and tighter and tighter. And then the closer it gets here to the cradle, the larger the breakout. But it can happen anytime from about 2/3 to here. So you really have to pay attention. And we're about there. And so ideally what you want to see, if it's a breakup, depending on where the breakup is, the base is typically a good way to measure the actual move. So if it comes up here and breaks upside, it'll typically make its way up to here over the long term. Now, the other reason you need to know the cradle is because, by and large, if the breakout's real, and especially if it's breaking out around 2/3 here of the way, it's not just gonna break up all the way here at once. Like, it's gonna do its waves, like just like this, moves back and forth, ebbs and flows. But essentially, it's going to make a peak, swing high or swing low around the cradle. So it's going to break out here, make its way up here, and then maybe like make a high here or around here, and then start to come back down to breakout price to balance supply and demand. And then if the long term's bullish, it won't come all the way back to breakout price. So that's how you can tell. On a throwback, it'll come back, and that's where you can get into Fibonacci and stuff. On a throwback, it'll come back the 23%, then the 32%, then the 50%, etc. But if it comes back 100%, then the trend is going to reverse. Like, that's not a good sign. So anything more than like a 70% correction, and typically it's going to reverse. But that's essentially it here. So that's the fundamentals. But as far as direction, the daily, it doesn't really give a good, as you can see here, it touched the trend line a third time and failed to break out. It failed to go here. It failed again to even break it here. Failed to break it even here. So the chances of it like coming here and then going up are lower than it breaking downside. And with the general market, in a bearish market, most stocks are going to go along with the market, so that would make more sense. But you can't really call it, but you just got to watch. But if you look here, it tried to break out CCI. Now you've got a lower peak on the CCI. Price is still up kind of high. So let's kind of see what happens. Price price is right here by the trend line. There was a squeeze, which is tight consolidation. It ended, which means it should have broke out, and it didn't. So that tells me the daily's kind of weak. There's not really anybody looking at it, investing using the daily. It might not be the best for forecasting. The 4 hour, as you can see, it's just kind of the same thing. Smaller bars, patterns, and securities are fractal. Same data, just spread out. But as you can see on the 4 hour, it's not quite there yet. So let's go to maybe a higher and see. Let's see on the weekly. And so on the weekly, it tells you a little bit more. Like, you can see here's a peak, here's a peak, here's a peak. So you can kind of draw your trend line here on this even, right? And what you want to see is it peaked here, then it came again here. Okay, that formed a trend. I mean, it actually kind of, right here is kind of where you would, so it tried to break out here but failed, but so it failed again. So now you've got kind of a downtrend there. So as you can see, you've kind of got descending, and so since the descending is pointing down, typically a descending triangle, that means price is going to move to the next lower Fibonacci degree. So it should break down and come downside to the next degree lower. So this is the top, that's 100%. It's coming down, right? Let's say it's coming down the bottom of this trend line. Let's say it's like a 23% correction. Well, this descension is saying, yeah, it's going to continue down to the next degree, the 38%. So then it breaks down and it makes a move down to here, for example, like to the next degree. And then it consolidates there. Or does another like descending and then moves to the 50. And so that's typically how it works. But essentially what we want to see here is we've got a squeeze, so that's good. Tight consolidation, momentum's increasing though on the weekly, so that's interesting. Not much volatility to move it anywhere. So it's not going to be like a huge move. If it does anything, it'll be like a smoother trend. The DI indexes are just confused, so you can't really use that. So essentially what we want to see is we want to see price action continue. We want to see some sort of breakout here on the CCI, either outside of the blue downside or above this blue line. And then once it, breaks out either way, we want to see if it's going to confirm price action. We don't want this coming down and price action going up. That's not good. That's not a good that's a negative confirmation. It's not a good signal to make a trade. But yeah, that's it. So it's topped, it's in a consolidation pattern that's descending. And so in summary, it could break out upside and continue to make a higher high, or it could break out downside to the next lower degree. And right now it's in a spot where it's consolidating tight. It's going to have to break out. If this is real, if all this is real, it's going to have to break out. See, here's a squeeze, and then it broke out upside, right? You've got your 2-3 bar confirmation, and we like to use 2 bar CMT, certified market technicians use a 2 bar, so 2 higher closes, close higher than this bar, close higher than this bar's range. Then you're buying in on this bar, so you would have been in at 492, and you're essentially holding as long as you can, and then you use something to get out, which for me is the CCI. When the CCI comes back into the blue, you sell. The move's over. The cash flows out. So you would have kind of been in there. You would have caught that move. You can use the decreasing momentum and even this kind of a volatility peak and maybe You're kind of seeing this. The DIs are a little bit harder to use for that, but DIs are really good to use for situations like on an initial breakout, like here, where they're kind of flirting a little bit and then they have a wide breakout and like they don't cross again. But we never use just one. We look at everything in context. We want to see this confirm price action and these two confirm it. And then I kind of use the ADX to measure the strength of the move based on volatility and to get a little bit of a bias directionally, whether it's bullish or bearish. But that's how I trade, which is the CMT way. I highly suggest getting the study material, at least level 1. All of this is covered in there. It'll give you the fundamentals to essentially build your own trading style and your own timing system, which is what this is. I can understand that it's in a consolidation pattern. I'm watching it. My action points are these trend lines. I'm looking for a 2-bar confirmation outside of either one. That's the lowest risk. That tells me the market is committing its money. And then I'm going to go in the direction, and hopefully this and these give me positive confirmations, and they all kind of, align. They all tell the same story. And so then I'm placing my trade and using good risk management by having a stop at the trend line. Because oftentimes it'll break out, and that's not a real breakout at that time anyway, and it will come back to breakout price at the trend line. And if it's not real or it's a trick, it'll slam upside, for example. And then you're really in trouble. So the trend lines are both the action points and the stops. Then you're looking for a 2-bar close out and then place your trade. That's it. And use confirmation. So hopefully this helped. Leave a like, subscribe, leave a comment. Let me know if you liked it or didn't, or if you have any comments, suggestions, etc., or maybe how you trade. It's always fun to learn. The main point of this channel is to facilitate discussion, so I'm pretty open to any comments. So anyway, good luck with your trading. Hope it goes well. Take care.